Okay, hi everyone. This is my attempt at trying to describe what I've been doing in the markets. So it's titled as being an opportunist and possibilities of being a discretionary investor or a trader. So these are just musings and my observations in the market, being in the market over now 12, 13 years. Um, Being in the market, we are exposed to a number of techniques, methods, philosophies. As you can see, value investing, technical analysis, fundamentals, momentum, portfolio management, how to ideate, and also stuff like Elliott wave theory. But the bottom line is, I as an investor or a trader is only looking for returns. So I would not like to put myself into a cult. Um, and putting ourselves into a cult is generally bad because your views become narrow. We've seen this with many cults, whether it's religious cults, philosophical cults, scientific cults. It's always not a great idea. One needs to be opportunistic in the market because we're here to only make returns. So we start with ideation. So my ideation strategy somehow over the years have habituated to stocks that is of a special type, and that's predominantly due to the nature of who I am. Uh, Most of these stocks are well researched in the past, so all the hard work is done by others, not really me. Um, but at the same time, it's been dumped in the last few years. It's gone completely out of fashion and has underdelivered. So typically, investors and some of the value investors have a great ability to ideate, to find out good companies who have specific good qualities. But because businesses are hard to run, they run into trouble, and therefore their margins contract and possibly get dumped. So this makes buying at reasonable price possible, and also building up conviction is easier because it's well researched with good data, and we don't need to do the hard work into building that kind of conviction. Um, so deep reflection of my behavior and myself reveals thematic ideation may be mine, but stock ideation is crowdsourced. So I may personally have an idea of a certain sector turning around or a certain sector doing really well, but that's a thematic idea. But stock ideas in that particular theme, I try to crowdsource it from forums like Value Picker, my associates, family members, so on and so forth. So that seems to have been my kind of way of ideating and picking companies to invest at relatively low value. And I also have had reasonable success in using the framework of low risk, high uncertainty, coupled with high quality model, which is inspired by Monish Fabrai, because this really, puts a decent limitation to downside risk, and makes me feel a bit more peaceful. And I've still not developed the need to buy into middle to late momentum, though I feel there is a case that one can consider doing that if you could handle your emotions pretty well. I personally don't handle emotions pretty well, and therefore find a need to buy at reasonably low prices, which can limit downside. What about technicals in ideation? Technicals are quite important because let's face it, I'm not a HNI. I'm not making the market here. So it's quite important to have a fair idea of how to time an entry. There are several technical patterns, inverted head and shoulder being one. Trying to see whether there's high volume somewhere near the bottom, higher highs, higher lows, moving average crossovers, and all of those typical entry points. What this is driven by a firm belief that I have that few market participants are extremely smart and know more than myself. So they probably will get in much ahead of the curve, and I would typically wait for that action to happen. So if a stock has fallen over the last 4 5 years and then consolidated at a bottom relatively, and suddenly there is a big there's a lot of activity and big volume action happening, definitely there's I'm interested in that technically as well. So, and that needs to coincide with what I just talked about on typical ideation thematically, and also research on the company. uh, there's also almost no noise on forums like Twitter when such high volume bottom buying happens. The momentum buyers come in much later because their metrics of entering is much different. So they're probably entering somewhere near the middle of the momentum and not right at the bottom. What about fundamentals? Yeah, fundamentals are now very easy to obtain using websites like Screener. But some things which normally people don't talk about, I've learned this from my father, is low equity share capital compared to the amount of profits or revenue a company is making. That could it's not many talk about this, but there's a very strong correlation between how stocks do and how they get valued to the floating stock in the market, which is kind of a function of the equity share capital. They have two companies with different equity share capital. The one with lower equity share capital with the same kind of return metrics tends to get valued higher. So this is quite an important one, and not many people talk about it. Uh, the other one is margins trajectory and underlying tailwind. So is the industry bottoming out while you're trying to ideate the stock is one thing to consider. Is the margins turning around? Are there hints of margins getting better? You normally don't get everything together as a Goldilocks scenario. All return metrics probably suck at the bottom, but there is a quarter which results in a turnaround. You could see that. So it's important to then start researching, reading con calls, listening to con calls, listening to general market commentary on it, and then taking possibly a bet depending on technicals as well. Potential market size is very important. I've seen that work for myself. You know, if it's a very mature market, then there may not be a great opportunity. It may be a mean reversion play. But if the market size is still very large going forward, then it's definitely worth a look. Promoter quality is very subjective. There have been cases of supposedly good promoters going bad, and companies with questionable promoters doing reasonably well. So I I do look at promoter quality, but not to that extent that normally people value it at. So all the other usual stuff like return metrics, cash flow, all are quite important. But a lot of times as a value investor, one needs to enter before these change favorably. Once these change, then market generally is quite efficient in kind of pricing it out. So you need to make compromises on these return metrics. Move on to selling. When it comes to selling of ideas that have of stocks or ideas that I've owned for a decent amount of time, the ideation framework is not useful anymore. Rather, I look at momentum. Why? Because market has shown time and again that it swings to extremes. So selling when the valuation mean reverts or precisely valued makes no sense, because you probably got in at valuation which made no sense. So market inherently is not so efficient. So you should expect vulgar valuations to set in at some point if indeed your ideation premise is playing out. So if your ideation premise is playing out, that is, there is margin expansion, industry tailwinds, everything is hunky-dory, then you could expect vulgar valuations to kick in, right? Better return metrics will eventually invite investors who want to pay premium valuation for so-called quality, because there is a section of the crowd which believes paying any amount of valuation for good return metrics. So in such cases, you would have vulgar valuations potentially setting in. You can see that in many stocks of today. So mostly my sense intuitively, buying at below 15 times earnings and selling at 40 plus earnings is really ideal. Um, and this would be coupled with the earnings CAGR. So which would mean that stock price, in there is a valuation expansion, there's an earnings expansion. It's a perfect setting for us to sell into. Now, selling early, this will happen to a number of us, but learning to hold companies through many cycles can potentially change one's life in terms of its in your portfolio value. But for this to happen, and to avoid selling early and holding on to multiple cycles, one needs secular momentum in earnings to happen. So you can't expect to you can't expect to hold a commodity play through multiple cycles. It's going to be like really harmful to your mental health. And so secular earnings play as well as potential market size of the story is still growing through number of cycles. So these two need to be there for one to continue having that conviction to hold. These 2 points are very important. Secular earnings momentum as well as potential market size growing. Um, Another point on selling early, a simple review of my portfolio changes over the years reveals that I could only hold one stock through the last 10 plus years of my investing career so far. That's shocking because I do believe in holding for a decent chunk of time, but most of my stocks have bought and sold, even the so-called multi-baggers in one cycle. The only phenomenal multi-bagger that I have is I've held only through multiple cycles only one stock, right? So but that stock today accounts for 45% of my current portfolio, right? So that stock did wonders to my portfolio so far, wonders relative to my expectations, and therefore it is quite important to know which stock to hold and which stock to sell, depending on what we just talked about, secular earnings momentum and a growing market size for the company. Um, is it luck? Yes, 50% is luck and 50% is conviction in my view. But really, conviction helps me to create an opportunity for luck to play out. So without that conviction, you wouldn't give time to luck to strike at some point of time to help you sell into irrationality, sell into that valuation that you could dream of selling. So it's important for the conviction that one day this secularly growing company will go into vulgar valuation. It's not an unreasonable expectation in my view. It's important to have such unreasonable expectations for a secular growing play, and we can see that happening today. So today, for example, mid-cap IT, we can very safely say that it's going to mean revert, and there's going to be time correction happening in mid-cap IT soon. So it's a perfect time to sell into those vulgar valuations that you dreamt of selling into. So indications for a good sell, valuation speaking out, 40 times plus earnings is definitely plus that is a good place to potentially look at selling, and margin speaking out. So again, mid cap IT margin speaking out, very clear with all that work from home triggering margins expansion eventually would mean that you would no longer get these multiples going forward. So that's a very good indication. Elliott wave theory can help. Not many people do really buy into this and possibly classify it as mumbo jumbo, but I have kind of seen experience that Elliott wave theory does help you. You know which kind of uh, uh, buying and euphoria the market is in, and it can help, but it's not really always helpful in cases of uh, uh, at the bottom of the market or something similar. Uh, Another simple indicator is the 20-day moving average acts as a resistance multiple times. So when there's a big bull run and then the stock starts to correct, one could think it's a correction during a bull run. But I have observed that uh, when the real correction sets in, or the start of a potential bear phase for the stock, this the 20-day moving average starts to go down, flat to go down, and then the stock starts to hit that as a resistance. So multiple times trying to hit that as a resistance, then you can safely try to take some money out of the table. Uh, and then now some my musings on portfolio rebalancing. It's detrimental. As a retail investor, I don't think I need to really worry about portfolio rebalancing. Just as an example, if I started 10 years ago with 10 stocks, if I kept rebalancing the winners and allocate to potential losers, I'll be subpar now compared to an index. So the lack of need for rebalancing is the only advantage for me as a retail investor over a fund manager, because a fund manager has to handle the emotional burden of investors. So if I can absorb some emotional risk, then I don't need to rebalance. I don't need to, cut my high conviction stocks. I can let it run. Else, if I don't want to do that, if I keep rebalancing, soon I feel I'll be performing as well or as badly as an index, a small cap index or a mid cap index, because that's where I'm interested in. So if I don't therefore think there is a need for rebalancing. So it is natural for a stock to earn its place as 50% of your portfolio. So I think it's important to recognize that this outcome is going to be a reality if one lets really big winners run. When you find the right time to sell this stock, which constitutes 50% of your portfolio, you really need to start from scratch. So in that case, once you have a reason to sell this stock, which is 50% of your portfolio, and when you're ready for almost full exit, then you need to start allocating equally to a number of decent conviction stocks. And then one or two of them may rightfully earn their place as a very large portion of your portfolio, maybe 10 years down the line. So that's really the framework that one, or the mental model that one needs to think about while managing one's portfolio. So it's not really a pure math exercise. There is no real big science behind it. It's just that upside of any stock is unlimited, downside is limited. Therefore, the math kind of forces the winners could potentially have a lot of allocation at some time during your portfolio lifetime. So momentum versus value, I've seen this quite a lot, the debate going on quite a lot on this, and I think I've been thinking, questioning whether momentum is indeed a better kind of framework for investing. Well, kind of come to a conclusion that value plus momentum is a winning strategy. It's kind of perfectly matched. Value one can use to buy, and momentum is one can use to sell, so that you get much more higher returns potentially in your portfolio. So this seems to, it can look ideal, but it is because all the value investors that I see sell into momentum, sell at extraordinary valuations, and they have bought at really cheap value. So they've actually practiced this. But the challenge is one will see many stocks that will not survive across cycles. So for this to happen, to give you extraordinary returns, you can't expect all your stocks to do it. You probably, out of 10 stocks, you only expect 1 or 2 stocks to do these 30, 40, 50 times. And that can really change your portfolio considerably. So this, one needs to also cut these so-called transitory multi-baggers and hold these secular multi-baggers. So that's definitely an art and needs experience to weed them out, those transitory multi-baggers. So in summary, one needs to be opportunistic, not call oneself anything, momentum, value, bear, bull, and all of that. It has no, makes no sense. Uh, we are here to maximize portfolio over longish period through multiple cycles. At least that's what I'm here for. Buying at low valuation with high uncertainty is a model that's worked for me. Well-researched dumb stocks are available. A lot of times price changes perception. So the research still stays the same. So I don't have time to meet companies to do in-depth research. I don't have resources, but I can crowdsource that. But thematic changes one can potentially identify. But what are the good companies that constitute that thematic change can be crowdsourced. Value Picker being a very good forum for that. Selling during euphoria undoubtedly has worked, but not at the start of euphoria. This is a big difference because start of euphoria can be really make so-called value investors very uncomfortable. They start complaining, cribbing, but that's when you actually start really having fun, and you see your portfolio doing really well from the beginning of euphoria towards the end of euphoria. And finally, have good acquaintances to discuss your ideas. Don't get carried away by fads is one thing that's helped me. And having people who you can trust, who you can ideate with, who you can discuss, who don't agree with you, who challenge you, helps you build your conviction and sometimes question any assumptions that you have unduly taken. Anyway, so this has been my framework and my experience. So if you found it useful, thank you. If you didn't, sorry to waste your time.